welcome. You're watching Business Today TV. I'm Sakshi Batra, and this is a special edition where we're going to be discussing the macroeconomic numbers. We've got the CPI numbers, or the retail inflation data for the month of February, and the headline inflation data number has come in at 6.44%. That is slightly lower from the 6.52% that we had seen in for the month of January. Now, to discuss this and much more in detail, I am joined by a very special guest on this edition. Mr. Siddharth Sanyal joins in. He's the Chief Economist at Bandhan Bank. Mr. Sanyal, good evening, and thank you so much for taking the time out for this discussion. So we have seen the headline number coming down at 6.44%. Your take, was it as per your expectations?
Yes, actually, indeed, this is slightly softer than the previous range. We were expecting the number to be a tad further softer at around 630. Compared to that, this is slightly higher, but broadly in the same zone. So 10-15 basis points here and there, but broadly it's in the same zone. The important thing is that even though the number is slightly softer, it's a slightly tricky situation because this is again second consecutive month where the number is beyond the upper tolerance zone of the MPC.
All right, we are yet to get all the other figures as far as the breakup is concerned for the food inflation number. In fact, that is now coming at 5.95%. Now, this is just like a tad bit above the 5.94% number as well. Now, we do remember that, you know, the month of February has been the hottest ever in the last 122 years or so. Could that have impacted this slight uptake? Is it, or was it expected to be lower, but it has actually jumped up on the back of the heat that we have seen and the impact perhaps on the Rabi crop? Your take?
Rather than looking back, I think it's more important to look forward from this point onwards. That not only February was the most warm month in many years, but at the same time it's very important that this time we are talking about an El Nino possibility this particular year, and that means there is a possibility of slightly less optimal rainfall during the course of the monsoon season, where the weather plays an even more significant role. My sense is that in the month of February, the Rabi crop, just because February was a little hotter than expected, it didn't really have so much of an impact immediately. But a much more important question is what is in store from particularly from May, June onwards for the next 4 months. I think that's very important because that will set the tone for the Kharif marketing season, Kharif crop season, or the summer crop, which is the main cropping season. I think that particular focus will be very important.
Okay. Still awaiting some more data as far as the cereals number is concerned, or the milk and the vegetable prices and pulses, inflation is also concerned. Those are important data points as well, which we will discuss. But you also mentioned about the monsoons, and that's going to be an important factor that may determine the food prices going forward from here. Everybody has been anticipating the El Nino weather pattern that usually results in the below average rainfall, cutting yields, pushing up food prices. Now, in case that were to happen, as is the expectation by most of the economists and from the IMD and the weather forecast teams as well, what could be the likely impact on food prices? Could we need to brace up for a huge bump up right there?
Oh well, I'd expect that the impact may not be that severe if we get a relatively better spatial and temporal distribution. If it is concentrated in some of the months, especially during the sowing season or in the early parts of the cropping months, then it's possibly a much bigger problem. But it's the deficit, if it is, say, something like a 5-10% kind of a deficit, the impact is not that severe. We do have an early warning, so that should help the croppers to plan better. Also, we have decent amount of food grains in store. So if everything remains in terms of how they are being projected at this moment, I think the impact is relatively manageable. But the problem starts when the food rainfall shortage becomes something like 5 to 10% is one story, and once it crosses that particular level, so 10-15%, then the impact is not really linear. So the key question is whether we have a relatively more even spatial and temporal distribution, and whether the deficit is capped within something like a 10%.
Okay, okay. We have some more data for the rural inflation. I think the February number has come in at 6.72%. Now, this would be slightly lower than the 6.85% we had seen in January. For urban inflation, it has seen a slight uptick to 6.10% from 6%. So, the urban inflation has moved up, but the rural inflation has come down. How do you assess these numbers, sir?
Oh, well, in case of the rural inflation part, the weightage of food and primary articles is relatively more, and which had been showing some sign of stability or some softening that was expected in this particular month. But on the other hand, there has been some inching up in case of a few service items and things like that, which remains the case, but slightly more dominant factor in case of urban inflation. So that's a mix which is not too surprising at this moment.
Okay, let me just actually come to on the RBI part as well. Looking at the numbers that we have got, 6.44%, although it has inched down, but it is still above the RBI's comfort limit. What will the RBI look to do in the next policy looking at this number? And I also wanted to take sense from you as to so far the kind of hikes that we have seen through from the RBI. Have those been able to manage to tame inflation, the purpose that they were being risen for?
Well, that's a very important question, and my sense is that well, the RBI's reaction to this particular data point, as well as whatever is likely to be there in the month of April, is far more complex than looking just at one particular number or the headline inflation number, because there. On one hand, you are absolutely right that there's two consecutive months of beyond the comfort zone kind of a number, and this with the El Nino's possibility that poses a greater degree of uncertainty about the path of inflation going ahead over the course of the next few months. But at the same time, in certain parts of the financial markets globally now, we are seeing some signs of financial market instability of late over the course of the last few days and last couple of weeks. I think in this kind of a situation, all central banks turn a lot more cautious in terms of further tightening of the liquidity situation or further tightening of the rate situation. A glimpse of that we are seeing at this moment in the Western world, where the expectation of a rate hike by the Fed has changed dramatically or quite significantly over the course of the last few days. So I think how exactly that particular situation pans out over the course of the next few weeks will also have a significant bearing on monetary policy decisions across the globe, including in case of India. So that also you cannot ignore. Whatever additional clarity we have about the weather conditions will play a role. It's very important to recognize that this particular number is beyond the comfort zone of the RBI.
Right. So, would you expect another hike? And if yes, then by how much, sir?
Well, we do think that, even in this particular policy, which we have just in the month of February, we were of the opinion that RBI could have avoided a rate hike even in the month of February. And we actually saw there was a lot of debate within the Monetary Policy Committee also, and the 4-2 is a reflection of that particular factor. So I think it's still early to say that whether we necessarily see a hike in the month of April. On one hand, the number is higher than RBI's comfort, but at the same time, they have to be very, very mindful about the global trends as well as possibilities of uncertainties in any possibility of uncertainties in the financial markets and financial system.
Sure. Again, like you talked about, there was a huge debate, and you also pointed out that you were expecting perhaps a pause to get initiated in the February month itself. But scenarios changed when the Fed commentary started to come in, and that created a little bit confusion about being, higher for longer, and perhaps that trickled in the Indian scenario as well. But we were discussing initially, I think, in the beginning of this year and the last part of the last year as well, as to a terminal rate being reached pretty soon. Are you able to decide as to how soon are we reaching the terminal rate, and what could be the terminal rate?
Well, in case of India, my sense is that we are pretty close to that. If we haven't arrived at that already, so I
Okay.
don't really see too much of a scope for further hikes in the Indian context. It's true that the inflation numbers are high, but at the same time, it's a reflection of so many factors, which is not very directly and immediately under the influence of a monetary policy. Also, it's very important to note that in the last or the last about 10 odd months when the RBI had been hiking, the repo rate was significantly lower than its usual zone, which is typically 6 to 7% kind of a zone. When the journey started, the repo rate was at 4%, but now at 6.5%, repo rate is in its usual territory. And going ahead, inflation expectations are likely to be softer 3 to 6 months down the line. We all know that monetary policy have to be forward-looking, and there are glimpses of some financial market instability or financial systems instability, very clearly not in case of India, but in certain parts of the world. I think all these things will have some kind of a bearing in RBI's decision. It's a complex decision, but very, very clearly, we are very, very close to the terminal rate if we have not achieved it already.
I also wanted to ask you, I mean, like looking at the kind of scenario, you said that it's a tightrope walk, it is a complex decision that the RBI will be looking at. There have been some concerns looking at the February rate hike that was done by the RBI as well, that are we at the risk of over tightening, and could that have a detrimental impact on economy and the growth going forward? What is your stance on that?
Well, I think in case of in case of I mean the current situation where indicators are really indicating in diverse directions, it's very difficult to say that whether the 125 basis point is over tightening or not. But ballpark, we are broadly in a range where rates should stay for a while, irrespective of whether it stays at 650 itself or goes for a 675 kind of a zone. We are not really very far from that. And what is important is that it's important not to hike too much so that there is no pressure of immediately cutting only a few months down the line. Rather than that, wherever we stop, and my sense is that we are around that particular zone, it's important that monetary policy rates remain somewhat stable or move sideways for a good number of months before it takes another direction anytime soon. So I think
Right.
that's very important, and we are already in that particular zone.
Okay. What about the stance of the RBI? Is that likely to change at least in the next policy? That was expected to change in the previous one. That didn't happen. Should that be more accommodative now?
No, I mean, given that the RBI has delivered several hikes over the course of the last in all the policies, if they eventually stop in the month of April, they might actually be mindful not to change or not to soften the stance immediately. They might actually stick to that particular stance if they do not deliver one more hike in the month of April, and be slightly more certain before they move to a slightly more neutral stance.
Okay, we do have the core inflation number that is coming at exactly 6.1%. That's unchanged on a month-on-month basis. We do remember RBI's commentary and the RBI governor's commentary looking at how core inflation is going to be a key data point for them to determine the rate high course or the course on rates going forward from here. Does that still remain quite sticky and challenging at 6.1%?
Shakshi, that's also a very important point, and I'm glad that you flagged that. We discussed that how various macro indicators are indicating in different directions. Also, within inflationary dynamics, also there are various all different or various different measures also at this point of time indicate in different direction. On one hand, we have something like core inflation, which is very sticky and above the comfort zone of RBI. But during several occasions, we have seen also the WPI number, which remains significantly lower than I mean its usual zone or compared to the CPI numbers. So I think in case of RBI, even though the mandate is very clearly in terms of a headline CPI number. Uh, all these numbers, on one hand, something like a core CPI inflation, on the other hand, something like a WPI inflation, one is much higher, one is relatively softer. Every single parameter do play a role in the RBI's overall decision making, and that's why it's a very, very complex decision indeed.
Right. Let me also read out some more data, the points that we have got from the data that has just been released by the government for the benefit of all our viewers. The February CPI fuel and light index is up by 0.1% on a month-on-month basis. So that's something that we need to keep in mind. That's shot up slightly. The clothing footwear index is up by 0.4% on a month-on-month basis. The housing index is up by 0.8% on a month-on-month basis. But the oils and fats index is down by 1.7%. That has slipped a little bit more. And the pulses and the products index is down by 0.3%. The vegetable index is down by 2.5% on a month-on-month basis. Cereals and products index is up by 0.7% as well. Which of the parameters are more concerning amid these data points for you, sir, at this point in time, and the more watchful data point going forward for the RBI too?
So there are certain segments within the food and the perishable segment which actually has the potential of they do influence the numbers very quickly and in big quantums. For example, milk, some of the protein numbers, some of the other perishables and vegetable related numbers, fruits, vegetables, etc. They do impact the number in a very significant scale many a times. So if that fluctuates, that can actually move the number in very sharply. But having said that, I'd like to highlight one particular area. Given that there are concerns about weather conditions and all, some of the more sticky numbers like the cereals, food grains, oil seeds, all these things, how exactly those numbers move, they remain very, very important over the course of the next few months.
Okay, let me just take one point, the development that we have seen over the weekend also, and ask you whether that will have any impact going forward on the RBI's move. We've seen the Silicon Valley Bank collapse, really impacting the stock markets worldwide in today's trading action and over the last two trading actions as well. That will that have an impact on how the Fed will really move on rates? The kind of impact that we are seeing on the banking system, the financial system in US, is that getting also impacted because of the constant rate hikes, the aggressive rate hikes that the Fed has also been doing, and could that in turn have an impact on the RBI's move going forward too?
Certainly, Sakshi, as I mentioned a few minutes back also, that given that there is certain question marks at this moment about the functioning of some of the banks in the US, there is a bit of a question mark or doubts about how exactly the Fed stick to the course that they had indicated just a few days back. You rightly mentioned that on the basis of the inflation numbers, they wanted to be somewhat more hawkish and they wanted to act a little more sternly. But at the same time, if there are more uncertainties about the stability of the financial system, typically any central bank would have to be a lot more cautious before delivering further rate hikes or liquidity tightening. I think to some extent, Fed might actually would have to take that particular aspect into account. And there is no point, ignoring the fact that the Fed's measures and monetary policy steps had been having a huge bearing over the last several months over global rate trajectory, including most emerging markets, including India. So
Right.
that way, if the large central banks go a little slow in terms of their fight against inflation down the course of about a week down the line, that would be very important indicator for all central banks, including the Indian central banks, also to take a note of. At the end of the day, each country's monetary policy is based on its own parameters, its own inflationary pressures, currency movement, and all other factors. But in today's situation, there is no opportunity of missing the indications that come from the global arena as well. And RBI will also they have always balanced beautifully amongst all these parameters, and there is no doubt this will be taken into account going ahead in April also.
Well, okay. Many thanks, Mr. Sanyal, for being with us on this show and discussing all these parameters and the latest data points from the inflation numbers that we have seen. Of course, we will be in touch with you as soon as we get any more developments from the US Fed and from the upcoming policy as well, to get more insights into the economy, inflation data, and how all of these macro data really impact the daily lives of our consumers and viewers going forward as well. Many thanks for joining us, for sharing all these insights. All
Thank
right.
you very much.
So we do have the CPI or the retail inflation data for the month of February, a slight drop from the 6.52% that we saw in January, the 3-month high number that we had seen in January for the retail inflation. It's come down to 6.44%, although it is slightly higher than most of the street estimates that we were looking at. So that's something that all the viewers will be looking at. Of course, this will be important to see how the markets and the RBI going forward will be looking at this number going forward from here. We're not still out of the comfort zone, as the number 6.44 is still above the RBI's comfort limit, and now we have fresh worries trickling in from the US financial system, and how that will really decide the course for the US Fed on the rates going forward, and therefore impact the RBI's overall move as far as rates are concerned, will also be an important factor to watch out for. But for now, slightly lower, but still not out of the woods as far as inflation is concerned. We'll wrap it up at that, but do stay tuned on to Business Today TV to catch all the updates from the world of business and stock markets right up next for you. Many thanks for joining in.